Hi guys, in this video we'll be reading traits about to happen, a modern adaptation of the Wyckoff method by David H. Weiss and forwarded by Dr. Alexander Elder and published by Wiley Publications. So let's read forward. When you go fishing in a lake, you don't just row out the middle and throw a line in the water. You go where the fish live, around the edges and near the sunken trees. Same way you enter trades near the edges of congestion, where bulls or bears are so exhausted that a small amount of pressure can reverse a trend. I've often heard these and other pronouncements delivered in David's southern drawl in my traders' camps. Now it is a pleasure to see them in his book, available to you even if you can't travel to a week-long camp and study with David in person. David is a quiet man who spends day after day in solitude in his trading room, but he has played a large role in the development of many serious traders. When discussing markets with friends, I often hear this is where David would draw a line. His way of reading charts has been taken up by hundreds of his students. Expanding on classical works of Richard Wyckoff, written almost a century ago, David has built a modern superstructure of market analysis. The changing heights of price bars, accompanied by rising or falling parts of volume, are the basic incredible elements from which David builds his market analysis. He uses these patterns to read the behavior of crowds across all markets and time frames, and then to place his orders. All traders leave indelible tracks on price and volume charts. David focuses on them, and these charts speak to him. Now, in his book, he teaches you to read their language. David's sharp focus on price volume behavior reminds me of a trader I had in medical school. She was shy and a little deaf, and usually stood in the back during grand rounds. We knew that she was so observant and so attuned to patients' body language that when professors disagreed about a diagnosis, they'd ask for her opinion. A person who watches intently on the basis of a great deal of experience and without any hidden agenda can see deeper than most. A careful reading of this book will open your eyes to the huge importance of false breakouts, what David calls springs when they point down and upthrust when they point up. Promises once you become attuned to the behavior of a spring and upthrust, your eyes will be open to an action signal that works in all time periods. The spring can provide the impetus for a short-term pop playable by day traders or serve as the catalyst for long-term capital gains. Having sat for hours in the back of the room while David was lecturing and showing trade examples, false breakouts have become one of my key patterns to trade. Now you can be guided dozens of charts by David, moving forward by bar as you learn to read their messages and anticipate trend reversals. The chapter on absorption will teach you to gauge the strength of the current trend. In that trend, moving forward like the Greek phalanx marching in step across the plain of Troy, as David puts it, is it, or is its advance being observed by growing supply, which precedes a reversal? Now, as your eyes move across David's charts, you'll see how their price and volume patterns reveal their secret weaknesses or strengths. Do not rush as you read this book. To fully benefit from it, you need to let its many messages sink in. Be sure to apply David's concepts to current charts, which watch them open up to you and become more meaningful before returning to the book and studying another dozen pages. This isn't a quick book. It took David years to write, and the more attention you give it, the deeper will be your benefit. Happy reading and happy Dr. Alexander Elder. Acknowledgements. I'm totally indebted to my long-term friend Dr. Alex Elder, who has allowed me to take part in his exotic trading camp. He has been the driving force in the writing of this book. He has always been willing to offer support and helpful suggestions, and he opened the doors to make the application by Willie Possible. I'm also grateful to the help received from Alfred Duggar and Bob Falls. They have been instrumental in the programming of my custom charting tool. Also, my many students whose needs have helped me crystallize different approaches to teaching the Wyckoff material. As a former teacher, I consider their successes to be my greatest reward. Now, introduction. Richard Wyckoff came to Wall Street in 1888. The details of his 40-year career are chronicled in his autobiography, Wall Street Ventures and Adventurers 1930. The tales of the large operators he observed and the inside story of their manipulative campaigns make interesting reading, but his search to develop a trained judgment for trading offers the most compelling and inspiring story. Describing his progress as of 1905, Wyckoff wrote, I had now spent the greater part of 17 years in Wall Street as a boy, clerk, silent partner, and managing partner in stock exchange houses. But with all I had seen, studied, and observed, I had yet no well-defined plan or method for money making in the stock market, either for my clients or for myself. Up to this point in his career, two threads wind through his experiences. First, big traders spend hours studying stock transactions as they appear on the ticker tape. Second, he saw the need for a college or educational service to teach the inner workings of the stock market. He wanted to show how the public was repeatedly built by the large manipulators in the market. In late 1907, as Wall Street suffered from the aftershock of another panic, Wyckoff decided to write an educational publication, a monthly magazine called The Ticker, consisting of articles about the stock market. The bulk of the writing rested on Wyckoff's shoulders, and the pressure to find new material led him into many facets of the stock, bond, and commodity markets. He tested mechanical trading methods based on statistics and numerous theories presented to him by readers. While he ultimately moved in a different direction, he realized that charts provided a better record of price history than pure statistics. As his study of charts and stock market techniques progressed, he turned to the ticker tape. I saw more and more that the action of the stocks reflected the plans and purposes of those who dominated them. I began to see possibilities of judging from the very tape what these masterminds were doing. Under the guidance of a former flow trader at the stock exchange, Wyckoff began a serious study of tape reading. His observations became the impetus for a series of tape reading articles in the ticker, and his readers clamored for more. The original series of articles provided the material for Wyckoff's first book, Studies in Tape Reading, published in 1910 under the pseudonym Rollo Tape. About this book, Wyckoff later wrote in his autobiography, and quote, the purpose of the self-training and the continued application of the method suggested in Studies in Tape Reading was to develop an intuitive judgment, which would be the natural outcome of spending 27 hours a week at the ticker over many months and years. In the next few years, the price swings in stocks became larger, and Wyckoff applied his tape reading methods to the broker moments of the market. The public demanded more frequent trading recommendations with less emphasis on the analysis. This spawned his trend later, a weekly one-page sheet containing a list of trades. It grew in popularity until its following became too large and unwieldy, causing Wyckoff to seek privacy. He ended the publication in 1917 after achieving the largest following of any individual on Wall Street since the 1890s. Wyckoff did not drift into obscurity. He wrote several more books. The ticker was transformed into the magazine of Wall Street, with which he was heavily involved until declining health forced his retirement in 1926. In the final years of his life, Wyckoff returned to the idea of educating the public and conceived a Wall Street College. His health dictated a less monumental effort. In 1932, he turned his attention to a course explaining his method of trading in stocks. The original course was divided into two divisions. Division 1, a course of instruction in stock market science and technique, and Division 2, a course of instruction in tape reading and active trading. Wyckoff died in 1934. Since 1934, the Wyckoff course, as it is known, has preserved Wyckoff's place in the pantheon of market masters. Thousands of traders and investors have taken the course, which is still offered today by the Stock Market Institute in Phoenix, Arizona. Over the past 80 years, the course has been modified and updated to accommodate changes in market conditions without disturbing Wyckoff's original work. It contains the specific details of Wyckoff's trading analytical method. His chapter on determining the trends of the market by the vertical bar chart of the NY Times average of 50 stocks captures the essence of his work and provides the guiding light for my book. Many students who take the Wyckoff course today focus on the models of accumulation and distribution. Wyckoff never devised such an interpretation of accumulation and distribution. They were added after his death. He certainly discussed some of the features of stock market behavior that were incorporated into these models. Accumulation and distribution are taught today as behavior revealed on bar charts with volume. Yet, when Wyckoff mentioned these terms, it was mostly in regard to point and figure charts and never with specific components. It is my opinion that these models were created by his former associates to add specificity to the course. As expressed in his autobiography, Wyckoff wanted to teach students how to develop a trader's feel, intuition. Specificity sells better than intuition, more tangible. I believe there is too much dependency on recognizing patterns of behavior rather than on the art of reading bar charts. These patterns can quickly become cookie prints, like geometric formations to which price movement is stuffed by those looking for a quick no-think fix. They lead to rigid rather than creative thinking. They often frustrate the new students of Wyckoff analysis who might not realize the world of chart reading is gray, not black or white. One has to have an open mind rather than being fixed on a preconceived ideal. While the metaphors created by Bob Evans, a famous trader of the Wyckoff course, describing springs, upthrusts, ice lines, and so on, are colorful and instructive, Wyckoff never used such terminology. However, that does not make them forbidden or useless. On the contrary, they are very helpful. Wyckoff was first and foremost a tape reader. As the markets grew more robust and volatile, he applied his tape reading skills to bar chart reading, where emphasis is placed on price range, position of the close, and volume. Wyckoff obviously knew the importance of trend lines, channels, support, resistance lines. However, they are given greater coverage in the modern course. I have borrowed from Wyckoff's original writings as well as the concepts of Bob Evans. My approach, which incorporates price range, close, and volume, also utilizes what I call the story of the lines. That is, the story of the price, volume, behavior as framed and incorporated by lines drawn on. The lines bring the price movements into focus and guide one toward the behavior that prompts action in the market. Thus, I'm trying to find trades on charts rather than figuring out if accumulation or distribution is taking place. A real goldmine of lies in Wyckoff's method of reading bar charts. It has become a lost art. The purpose of my book is to show how one can logically interpret bar charts, wave charts to find trades about to happen. By studying the chart examples in this book, I believe the reader will gain tremendous insight into reading what markets say about themselves. It may seem tedious at first, but through practice and repetition is the mother of wisdom. It will become second nature. It will give you the ability to locate turning points of different degrees. In the studies that appear throughout this book, we will first compare effort of the buying or selling with the reward, that is volume versus upward or downward progress, and then watch for ease of movement or lack of movement, which is wide price bars versus narrow price bars. Then consider the meaning of the close within the range of a price bar. Okay, and then watch for shortening of upward or downward thrust. Afterwards, watch for follow through or lack of follow through after penetrations of support or resistance. This includes the notion of springs and upthrust. And then watch for the test of high volume or vertical areas where price accelerated upward or downward. And then finally consider the interaction of price trend lines, channels, support and resistance line. Often highlight the price volume story. In the second half of this book, I will introduce adaptations I made to Wyckoff's original tape reading tools, which are better suited for the enormous volatility of today's stock futures market. This can be applied to intraday and daily price movement, and software has been created for use in real time to find trades on any type of chart. Will be guided by the following statement made long ago by Richard Wyckoff. Quote, successful tape reading, chart reading is a study of force. It requires ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. There are critical points which occur in each swing, just as in the life of a business or of an individual. At this junctures, it seems as though a feather's weight on either side would determine the immediate trend. Anyone who can spot these points has much to win and little to lose. After reading this book, I guarantee you will never go back to the previous way of viewing the charts. I have no secrets and will teach all I know about Wyckoff and price volume behavior. Confucius once said, a true teacher is one who knows and makes know the new by revitalizing the old. Okay. Now, chapter 1, where to find trades and overview. Finding trades is like finding fish. Fish can be randomly caught in any part of a lake, but they tend to congregate in specific areas at different times of the year. Similarly, big trades can be hooked at any point on a chart, but they appear with greater frequency around the edges of trading ranges. Trading ranges do not have set of patterns. Prices may twist and turn in a myriad of ways before a trading range is resolved. In general, however, trading ranges are rectangular, shaped with prices swinging back and forth between the upper and lower boundaries or coiling into apexes. But we are concerned with the dynamics of trading ranges rather than any geometrical shape. When trading ranges evolve over many months or years, often expand their boundaries and contain numerous smaller ranges. The bound areas of trading ranges are repeatedly tested and or penetrated as the buyers and sellers struggle for dominance. Whenever the boundaries are breached, follow through or the lack of follow through becomes the deciding factor. After breakouts or breakdowns occur, prices often retest these areas. In the next few chapters, we will examine the characteristics of price volume behavior at these various points. Keep in mind, we are dealing with trading ranges of all sizes and not solely on tops or bottoms. The behavior described here occurs on all charts regardless of their time period. With practice, one can readily identify the behavior areas circled on figure 1. Here to find trades diagram. So these are the circled areas. Shortening of thrust, these are called shortening of thrust. Up thrust, going upward, up, springs, going downwards, breakdown, test of springs, breakout, test of breakout, going up, then coming back to that retest that area, absorption, right? Then test of breakouts, breakout, breakdown, and test of breakdown. Okay, so the first step involves drawing the trading ranges, a seemingly easy task that requires an eye for horizontal relationship. We have to draw this horizontal line. Okay, ranges. Look at the 6 trading ranges CR1, CR6. On figure 1.2, 6 trading range, string, trading range 1, breakdown, breakouts, test of breakouts, trading range 2, okay, absorption, trading range 3, trading range 4, breakout, test of breakout, coming back, trading range 5, trust, down, then test it came down, up thrust, test of breakdown, this test breakdown, then it went down, trading range 6, Nasdaq continues daily chart. On figure 1.2 of Nasdaq futures, by repeatedly framing the support and resistance lines, we see how trends consist of individual ranges and the turning points emerge from the otherwise tangle of price movement. These turning points springs, upthrust, absorption, springs, upthrust, absorption, and tests of breakout and breakdowns. Breakouts, test of breakouts, breakdown, and tests of breakdown serve as action signals. In later chapters, volume will be incorporated into the understanding of this price behavior, but first we will focus on the lines. Reading a chart without lines is like studying a world map without boundary lines. It's the subject of the next 2 chapters and serves as the first step in my method for reading charts. Okay folks, tomorrow we're gonna be reading chapter 2, drawing lines. I'll see you guys in the next video.